I've never seen our pipelines fuller. I've never seen more demand. I've never seen more excitement. Customers are getting their head around how to deploy AI.
Salesforce is about to go completely parabolic, and the reasons could not be any simpler.
Why? Because we have more revenue than we've ever had, more profit than we've ever had, more cash flow, more customers, more innovation.
I'm in.
It's unbelievable.
I'm all in.
Let's figure out if the story has completely changed by looking at the bull and bear case, valuation, price target, and where I'll be buying. Real quick, if these videos help you trade, hit subscribe for more clean charts, estimates, and figuring out what's priced in, as I have way more AI-related stock content coming soon. We're maxing out our returns this cycle, so check out other stock analysis videos on the channel, which you can find in the playlist. You heard it directly from the CEO, Mark Benioff, who's been with the company since inception and has never been more excited in its history. The reason is the idea of an agentic workforce, where every company utilizing their platform will have an unlimited army of agents interacting with customers, closing deals, and ultimately driving revenue, which has never been seen before. They're so confident in their future growth that they put out a target of $60 billion in sales by the end of the decade and an even more aggressive operating margin target of over 34% compared to the low 30s today. But with all the good news and breakthroughs in artificial intelligence performing agentic level work, why is the stock down, and why do investors believe that AI will lead to a slowdown in Salesforce growth and not an acceleration? This isn't the first time Salesforce established pie-in-the-sky revenue targets. If we go back 5 years when they announced that they would be at $50 billion in revenue by fiscal year 2026, we could fast forward to today, and they're only pacing at a low $41 billion, which is well short of the original $50 billion target, but still a really respectable number for a software company. So the company has a history of overpromising, and I think this is a big reason why the stock did not actually close up on the day when they announced their $60 billion revenue target. In fact, there were likely sellers above, because if we look at the daily chart here, the past couple of times price rallied to my moving average, it's exactly where price started to sell off. And this is actually the same reaction that happened back in 2022 and 2023, where if we look at the chart and understand the estimates at the time, this blue line shows the estimate for 2026 fiscal year of their total revenue, which was at $50 billion back in 2022. But as I just mentioned from their presentations, has dropped all the way down to $40 billion, so investors weren't taking it. In fact, if we plot the 2030 fiscal year revenue target, things have still not been priced in correctly, because revenue's only at $54 billion compared to the $60 billion target we discussed. So this might create a mispriced opportunity. If Salesforce is able to deliver on their promise of reinventing how businesses are able to sell their products to customers, then the market is definitely not pricing in that growth, and they'll have to play catch up when estimates have to be raised. So let's have a look at how Salesforce has performed against their estimates over time, going back a couple of years to 2016. We can see why the stock has had such a historical run, because over the past 10 years, they haven't missed an EPS estimate once. And not only that, but looking past 2022 up until today, the velocity and slope of how high the earnings estimates have come have only demonstrated the earnings power of Salesforce as they've continued to beat higher and higher expectations. And looking ahead, I just changed the chart to the next 12-month earnings per share estimate in the blue line against price, which is black. And this is the mispriced opportunity I just talked about, where earnings estimates continue to be raised, and we know that Salesforce is very confident that their Agentic Enterprise strategy will pay off big long term, so there must be another reason why the share price continues to drop. The bear argument today is that Agentforce only contributes a small amount to overall revenue, which we can see from their presentation is true in a customer example. However, the Agentforce products haven't even reached their full potential, and I believe the market is looking for another Palantir story, where they see a large enterprise fully deploy AI in a meaningful way. And I want to clarify, this is not generative or automation AI, but agentic AI, meaning that if you have Salesforce, you're able to deploy an army to go out on its own and perform end-to-end work, which I think is just as valuable as real-world AI, which you see robotics companies like Tesla trying to achieve. So Agentforce hasn't hit its full potential yet, but how is the rest of the business doing? We could see across every line of business that Salesforce operates in, things are still growing at almost double digits for the last 6 quarters in a row. It only demonstrates how important people think Salesforce platform is, and without it, they wouldn't be able to achieve revenue targets of their own. So this is still an encouraging sign that the core business will support growth all the way to $60 billion in sales. And switching over to that 34% operating margin target by looking at analyst estimates out to 2026, we can see that EBIT margin has already adjusted to 34%, meaning that there's more confidence in the story of Salesforce becoming more efficient operationally than they are of accelerating their revenue through Agentforce. And it's not just customers who are deploying Agentforce across their enterprise, because Salesforce has also stated that they plan on continuing to develop their own internal software using AI agents of their own, which could only lead to more operational efficiencies over time and should lead on saving expenses across the board. The prior story of Salesforce was grow at any cost, and they did just that by making multiple billion-dollar acquisitions over the past couple of years, which gave them a competitive advantage across multiple lines of business. And as we keep discussing, once they're able to deploy AI agents across all of their verticals, I think it'll only strengthen their competitive moat and be harder for competitors to catch up unless they do big acquisitions or come up with products of their own. I pulled up the biggest names in software right now, and on the very right-hand side, we're looking at the compound growth rate over the next 3 years for earnings per share, which is only showing that Salesforce is growing at 12% per year and the lowest in the group. So at the current point in time, investors are only pricing in that Salesforce is a mature company, and the impact of Agentforce is yet to be seen in the results. And that's also true if you look on the left-hand side at the forward price to earnings ratio over the next 12 months. Salesforce is also one of the cheapest stocks in the group, trading at only 20 times forward earnings. Taking a closer look at valuation, I just pulled up the next 12-month price to earnings ratio in blue, which is trading at that same 20 times right now. And if we look all the way back to 2008 and 2009 during the Great Financial Recession, Salesforce is actually trading below that level, which is really remarkable because in no way are we in the same situation as we were back then as we are today, as we discussed with Salesforce only expecting to accelerate revenue and earnings in the future. And as I pull up the chart on the bottom, which is the share price, we can see as Salesforce traded at around 20 times forward earnings, that's where it marked the bottom and is showing that that is the same ratio that we're looking at today. It blows my mind that we're trading at recession level valuations when earnings estimates are projected to grow at double digits each of the next 3 years, reaching $14.50 per share by fiscal year 2028. And as we discussed, most likely this doesn't reflect the true earnings power of Agentforce long term, since the technology today is the worst it will ever be. Management thinks their stock is severely undervalued here as well, because they continue to allocate more capital to their share buybacks, which will only help accelerate EPS growth long term. The way I'm thinking about valuation is if Salesforce is able to return to its high-end forward price to earnings ratio of 35 times and trade like a true artificial intelligence stock, which you can see across the peer group is where most of the big tech companies today are being valued at, then we can apply that 35 times multiple to the 3-year EPS target of $14.50 and estimate that this thing long term could hit as high as $500 a share, when compared to Wall Street only hits as high as $430 a share at today's estimates. So I think in the coming quarters, if they're able to deliver well above expectations on these numbers, then analysts will have to raise their numbers and the stock should move higher over time. But before we get ahead of ourselves, since we know price always leads fundamentals, Salesforce has to clear this 20-week moving average or it will continue to lose momentum as bears hit their sell orders here. Let's recap everything we talked about, starting with the bull case. They just came out with big revenue and margin targets that haven't been fully priced in, and there's confidence from management that operating expenses will go down over time as well, which should be beneficial for long-term earnings. I can't believe Salesforce is trading below its 2008 valuation, and I don't think I need to keep explaining my point here. It's just screaming value right now. You have to believe AI is changing everything, even if the time frame is unknown. And customers using Salesforce already, such as Dell Computers, are already saying how Agentforce is a complete upgrade to their sales team and long-term outlook, which is a very positive sign as things start to ramp up in the future. Lastly, they're going to have to do something with all the cash they're about to bring in, and it's encouraging that they're already focused on buying back shares, and it's a good signal to investors that they think the stock is undervalued as well. So we should see earnings per share only go up from here. Moving on to the bear case, the company does have a history of overpromising, under-delivering, and missing revenue targets, which they're on pace to fall short of this year, plus was almost the #1 reason why the stock nosedived back in 2022. There's an argument against the core business of Salesforce declining, saying that everyone who already needs Salesforce has it, and the business is becoming a legacy software product. But I don't think this could be any more further from true. It's been 6 quarters in a row where every single line of business has been growing at almost double digits, and even if that legacy side of the business is seeing any sort of slowdown, I don't think overall revenue will go down in the near term because of the addition of Agentforce, which just didn't exist before and will be a huge driver for them. This also ties into the third argument because of the barriers to entry to create your own AI are so low, customers will begin to develop their own Agentforce clones. But I think this is also another silly argument, because if you're a business, you're not spending 100% of your time trying to figure out how to clone your own software, and that's the sole reason why you pay Salesforce in the first place, is so they can be the leaders in innovation and your business can focus on what they do best, which is selling products. And lastly, bears think the revenue contribution from Agentforce will be overblown and end up a gimmick, but all new technology takes time to grow, and that same argument was probably said back in the 1990s, 2000, 2010s, and here we are in the 2020s, and the stock continues to go up year over year as they innovate their way to success. I'm giving Salesforce a cheat codes unlocked out of 10, and I'm paying attention over these next few quarters to see the story develop. You won't find this kind of analysis anywhere else on YouTube, so please like and share the video, and check out more deep dives on your screen now.